joining us with all those details. But shifting focus then, and today on the show, as promised, we will put the spotlight on the significance of price risk management using commodity derivatives, spices complex, and turmeric in particular is what we will focus on. And to discuss this in greater detail, we now have Mr. Shubham Jhawar, owner of Preeti Enterprises, now joining us. Mr. Jhawar, thank you so much for taking your time out and speaking with us here on ET Now. And first up, help our viewers understand what really are turmeric commodity derivatives. Is it different from other derivative contracts? And if yes, how are they different? And what are the fundamental factors that drive the prices of commodity derivative contracts?
Good evening, ma'am. Firstly, a very happy New Year, a very happy and prosperous New Year to everyone, all the viewers of ET Now. And now coming towards the turmeric derivative futures. Firstly, derivative futures. Let me say something. Derivatives, the basic definition is it is derived from a product. So the derivative futures implies that they're derived from the spot markets. So these are the futures which trades a monthly, bi-monthly, or tri-monthly contracts. We have tri-monthly contracts in turmeric when you come to turmeric contracts. That is a near month, next month, and future month. So these all the three contracts are based and derived from the spot, that is spot market, which is trading in the physical markets.
Did we get that point? And Mr. Jhawar, how can we actually use these derivatives to counter the current volatility? Do derivative contracts really help in beating volatility, especially in such times when volatility is at its peak?
Yes, they definitely help to beat the current volatility. See, if you see, I'll give you like examples how this contracts works. When we have seen in December, there were times when future was trading below the spot prices at certain levels. When you see 127, 128 was the spot price, and we have seen futures at 124, 25 levels. And during December, that is pre-harvesting period, the supply in the market is very low. Then people who would have entered the contracts here at 124, 125 levels, they could have got it at lower prices, and there would be a surety of the material which would come from the exchange. And on the other counterpart, if there is if on the higher side, if the market goes up, farmers and other traders can book their prices over there. I'll give you an example. In the month of May and June, turmeric prices hit a record high of 200 rupees, where the spot was trading at 180, 175 itself. So they could have sold their futures, they could have booked the futures over there and would have given the delivery in the next periods, coming periods. And they would have got an arbitrage of 30 rupees.
Use turmeric derivative contracts, but Mr. Jhawar, how are commodity derivatives actually used as efficient risk management tools? How does the process work, and if you can give us some examples in greater detail?
Yes, see, derivative contracts basically you should have a good exposure on it, unless there are multiple things in it. If you see, if let's take example of us only. We are basically processors of turmeric, and we require turmeric 12 months the line. So if at a certain levels, at certain points of time we don't get good arrivals in the market, so this turmeric derivative contracts, if we have a long position in the market, we are always bound to get goods to us.
And how is
Like we can even
Okay, and how is the market dynamics as far as turmeric market at the moment is concerned? How do the fundamentals shape up, and how is the demand supply situation at the moment, which will ultimately determine prices?
See, turmeric, if you see from the past 2 years, it has been a golden. People say it is a golden commodity, and we have seen the golden years of turmeric from 2024, and we expect the same in 2025. If there is, you see, there is always a rally period in any commodity. It always goes around 2 to 3 years in an ongo. If you consider it, in 2009, we had turmeric prices trading at 38 to 40 levels, which reached out at 180 levels. The same goes on with 2023. We have seen the bottom prices at 60, 65 to 70 levels, which are with the higher level, which we have seen at 202, 203 rupees. And you see now, when the actual cost of turmeric for the farmers was 70 to 75 rupees in the year 2023, and the prices were trading below those levels during that period of time. So the farmers buy by themselves, they didn't put much of the turmeric in the coming years for the 2025 year. So we have seen a shortage of that material in 2025, and we've seen higher price. The same goes on for 2025 year also. Here, 2025, we will see the least carry forward going on in the entire history of turmeric. See, the total demand for turmeric is around 1 crore to 1 crore 5 lakh bags. And we have the coming crop, we expect it around 90 lakhs. And our preliminary reports show that there is a yield loss of at least 10%. So it would be around 80 to 81 lakhs. And the carry forward would be of 20 lakhs. So we are on a very tight supply, will be on a very demand to supply, very tight ratio. So we
As
can
far as
again
the
expect a rise in the market.
Understood. So that's as far as the domestic positioning of the turmeric market is concerned. But how is India positioned versus the rest of the world as far as import export dynamics is concerned? Can you help us understand?
Yes. See, there are multiple countries which actually produce turmeric, and the ratio is going much more forward. Previously, India, Ethiopia, these were the countries which were producing. Now we have Myanmar in the list. I've also heard there is a area called Fiji near New Zealand which also produces turmeric. But India contributes at least, I would say, at least 90 to 95% of the total demand of turmeric. And curcumin levels are good, fair enough, but Indian turmeric when you compare to other turmeric.
So that's as far as India's positioning in the global turmeric market is concerned. But Mr. Jawar, since we are talking about derivative contracts in particular, help us understand the two main advantages and disadvantages of using turmeric derivative contracts.
See, turmeric derivative contracts, when you use it as a hedging tool, these are very good. And the disadvantage, the most disadvantage is when people use it as a speculation tool.
Volume when
It
it
is
comes to turmeric derivative trading, is the volume good enough?
Yes, the volume is fair enough. Previously, to 2020-21, we had very low volumes when you compare with the all other commodities. Turmeric had the least volume even. Sorry, even now we have good. We have very less volume when compared to other commodities, but we have increased fair enough. The volumes have increased fair enough in turmeric.
Volumes have increased, and do you expect them to increase further as compared to other
Yes,
commodities?
yes, definitely. We are expecting it to increase further because the participation is increasing from everywhere. Even the exchanges making sure that the participation increases. They have allowed FPOs to trade in it. They have recently started option trading in this to help the FPOs to get in it. We have tier three AIF category funds also who have their exposure into turmeric.
Understood. We get that point, Mr. Jawad. Thank you so much for taking your time out and speaking with us here on a whole host of issues related to turmeric derivative contracts, the advantages, and the fundamentals behind the move. Thank you for joining us. Shifting
Thank you, ma'am.
focus to our